Welcome back to Block TV. It's time now for Chain Breakers, where we talk to the top voices in the blockchain and digital assets ecosystem. We're joined now by Bruce Fenton, CEO and founder of Atlantic Financial, Chainstone Labs, and the Satoshi Roundtable Retreats, to discuss some of the latest news and events from across the crypto sphere. Bruce, firstly, thanks so much for being with us.
Thank you.
All right, so Bruce, this week you put together an interesting piece you posted up on Medium about Hester Pearce, crypto mom, as she's often known in colloquial terms, her safe harbor proposal, which proposes that new establishing tokens and coins have a 3-year safe haven period in which they're able to establish themselves, fulfill certain credentials before being considered whether or not they are securities or not. Now, you have an interesting and unique take on this that I want to hear from you, Bruce. So take it away. Tell us a little bit about what your thoughts are on this proposal, its strengths and its weaknesses.
Sure. Well, the strengths, first of all, I think it's really great that we have a commissioner who's so involved. Commissioner Pearce is probably one of the most involved people at high-profile roles at the SEC who's active on this. So it's really great that regulators are looking at this. They care. They're trying to make it easier for people to comply. So I think the effort is really welcome and well placed. But with this specific proposal, I have some concerns, mainly relating to how it incentivizes. You know, at the bottom line of it is it basically incentivizes companies to not be a security. This exemption wouldn't apply to securities tokens. This only applies to protocols who don't want to be a security. And I've always thought that kind of this idea of avoiding securities rules, they're trying to be a utility or trying to be a protocol that's not a security, is not necessarily the greatest way to find investments. Securities are a proven method of having investors share risk. So stocks, bonds, mutual funds, venture capital shares, they may be very risky, but at least it's a proven method. Whereas if you go into a protocol, how are you going to make money? Maybe you will, maybe you won't. I don't think protocols are where we should be focusing. I think we should make regular securities easier to invest in and easier for people to comply with the rules on.
Now, Bruce, I take the point that you're making there, but to play the devil's advocate on this for a moment, I speak to a lot of people throughout the crypto sphere and space who are looking for, I guess, what we could call a more revolutionary approach in the way that cryptocurrencies and digital assets are going to be used, regulated, work towards the future of a digital world, whether it be from hyper-Bitcoinization or any myriad of technologies that are being used. And many would want to move away from the tried and true established methods of securities and other mechanisms like that, saying that that's representative of a previous era that isn't reflected in these new assets. What would you say to that sort of argument?
For sure, that would be the ultimate goal. But we live in this reality now where we have these rules that have been around for a long, long time. And these rules have been around for a long time, and they're very, very broad in their definition. The Securities Act of 1933 definition, it includes stock, bond, investment contract, evidence of indebtedness, all of these other kind of things. And those are really all the terms that make an investment good. Those are the terms that make it so that you can profit from an investment and share in risk. So if you strip those out, it's very unlikely to be a good investment. Protocols which may not have much value will be harder for them to have value.
So then would you say that a lot of actors out there that are looking to avoid this classification as a security are doing so because they don't want to live up to the standards of providing a high quality product that adheres to those particular security standards? Do you think this is as an extent of nefarious activity or at least negligent activity on the part of a lot of actors out there who are looking to avoid this classification?
Not necessarily. It's just people trying to avoid the burdens of the regulations. And a lot of people have said, well, the regulations are very hard to comply with, so let's just avoid them entirely and not be a security. I think the better effort would be focused on making securities easier. So instead of having a proposal that says, hey, you're going to be a security in 3 years, we have a proposal that says something like, it'll be easier to comply with the securities laws. I'd personally like to see reductions in Reg CF or these kind of things, to make it easier to be a compliant security. Because again, if you strip out all of these terms and you make things not a security, how will people make money? They have to just hope that that protocol is going to make money, and that's very hard as a protocol. Businesses and securities, stocks, they're a proven kind of method. Still could be very risky, but at least the vehicle is proven, where this is something you're trying to create a new type of financial instrument, which could work in limited cases like Bitcoin or. I think that we should be, focused on more securities and having the, those type of traditional investments work. Do that is to reduce the existing burdens on securities that the SEC has.
Mm-hmm. All right, so then looking beyond Pearce's specific safe harbor proposal, other ideas that exist out in the space that can be used to, I suppose, encourage growth, let's say. Any other things, Bruce, that you think that could be adopted by regulatory authorities there in the US to help encourage growth and innovation in the industry?
Sure, there's a couple things. One thing is the reducing of accredited investor rules, and that could come by adding a new exemption or making the existing exemptions a little bit more, encompassing. It's a real hassle right now for people to be accredited. Those rules are kind of outdated. There's not a lot of great rules that say that, only if you have a certain net worth can you invest in something. Everybody should be able to a lot of information around. These rules were made back in a day when have access to financial data. So you had this, bad, wrong-headed idea where, nobody involved in creating those laws is even alive anymore. They're just outdated laws, the accredited investor rules. So I'd like to see another exemption that makes it easier for people to invest, something like Reg CF, maybe expand it, make it larger. And also a lot of the things around AML and KYC. Those are big, big bottlenecks for this industry that make it very, very difficult to comply. I think we should have more capital flow and make it easier for people to invest and take those risks.
But interesting you bring up those points about the AML and KYC elements, because the FATF, obviously bringing this to an international conversation, the FATF is moving in a different direction with their travel rule, that Rule 16 guidance that they're putting out that's meant to come into effect around the middle of this year, saying that exchanges in particular need to really have strict guidance and strict regulation about complying with that travel rule and getting that key data from users around the world. And again, this obviously, when we talk about digital assets, is not just related to any one jurisdiction, but is a global issue about global regulation, interoperability, functionality across the globe. Do you think that global regulators are heading in the wrong direction about this? And is it a course that can be changed? Or do you think it's already too late and we're already locked in?
In some cases, the regulators are headed the wrong direction. I think it can be changed, hopefully by technology. I mean, just this morning, I published an article about a sort of a cypherpunk solution to avoid these mass identity theft, AML, KYC honeypots, where you have financial institutions that have a lot of people's identity information and it gets robbed. There are technology solutions where you can protect people's identity. That's the core of the cypherpunk manifesto, and a lot of this industry is about protecting privacy. So there's ways you can kind of put some of this stuff offline and protect it while also complying with regulations. And I think that's the best path forward. Some of these regulations, like the 33 Act, they're just not going to change materially because they've been around for decades and decades. But what we can do is add technology solutions which make it more of a cypherpunk thing that works like Bitcoin, but also complies with the regulations. I think that's the best effort going forward, something where everybody is happy, hopefully.
Mm-hmm. Now, as we talk about this in the theoretical, Bruce, as we speak at the moment, Telegram is sitting in the Southern District of New York court facing off against the SEC about their proposed Gramm token sale on the Telegram Open Network that they're setting up, potentially a very big ruling which could have widespread implications for the sale of tokens and regulations in regards to securities or not securities in the United States. Looking at this case, either in general or specific terms, but do you feel that this is the sort of case that could help set some of the precedent on some of the issues of security definition in the cryptocurrency space, as you were talking about?
It's possible. I hate to say this, but I don't think it's a real case from what I read. In legal cases, you always want to be careful about commenting because they're very, very complex. Quite a bit about it, and it didn't seem to be a really strong case to me. If you're raising a lot of money in the United States, it's almost like you have to be guilty until proven innocent. You probably are a security if you're making a tradable instrument. The 33 Act definition is extremely broad, and it's been interpreted by many, many courts to be broad. And people have been trying long before crypto. Howie himself was trying to avoid securities regulations. Long before crypto, people have been trying to get around these regulations, and usually it hasn't gone well. Best of luck to him. I hope that it results in reducing regulation, and I'm in favor of anybody who wants to challenge these, because even if they lose a case, that's what keeps the legal system in check. These kind of cases. So I definitely applaud the efforts. I wish them the best. I hope it reduces it, but I don't think it's super likely in this particular case.
All right, well, this is one we'll have to see how it does pan out. Potentially big implications for the crypto space, but certainly, as we've discussed today, plenty of opportunities on the table to take some new and innovative regulations in and around how we deal with digital assets. Bruce Fenton, I want to thank you so much for taking the time to speak to us today on these key and important topics, as relevant as ever. So for those watching, stay with us at blocktv.com for all the latest in news and information. I'm Asher Westrop-Evans. Thanks for watching.
For more news and updates, follow us on Twitter.